GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the Market Analysis Webinar. It's our weekly Monday webinar. The plan here is that we'll cover major forex markets, commodity markets, indices, and of course cryptocurrencies. Any extra markets you'd like us to cover, please drop a comment in the video. We'd be happy to cover those in the future. But for the time being, these are typically some of the most popular markets that we experience from clients. So, just to run down quickly what we're going to look at today, it's going to be technical analysis of the euro dollar, dollar yen, pound dollar, Aussie dollar, gold, Bitcoin, WTI spot, crude prices, and the S&P 500, our contract, the SP 500. Okay, let's get started. So let's just jump out quickly to remind ourselves where we are. This is the euro chart. Now very range bound and a little a lack of direction, but more recently, remember, we've had this kind of spurt higher, and so now we're sort of trying to consider what happens next with this correction phase that we're in at the moment. So at the moment you can see that 112 is the round figure that's been holding it, and you remember last week we mentioned that this kind of shaded blue area around 112 has been a kind of dynamic pivot level for the price for quite a while now, as the price has been making lower lows but sort of stabilizing, and this has been both a support and a resistance, and currently it's support. So then from there it's useful to drop down to our hourly time frame, and you can actually see, let's start the 4 hour. You can see that we were talking about it as it was dropping into this level last week. We had a rebound and we pulled back into this level. 112 held nicely, and you can see the closes to these series of candlesticks through here. If I zoom in a bit, they're all on these 4 hour candlestick. They close all around this top part of the shaded area, and you can see this is kind of an area that the market is paying attention to. And then again, if we drop down to our 1 hour chart, you can see that we've basically put in a double bottom pattern here at 112. We've broken up to the top side, we've retested, we're rebounding top side. So in the short term, this looks quite bullish. We've held off the prior low down here. We've held this long-term pivot level, as pivot zone, as we discussed, for a second time. We've put in a short-term double bottom pattern, and we've broken the neckline of that pattern. We've retested and we're pushing to the top side. So it looks bullish at the moment. We're near the highs, but we've had a minor correction phase. Of course, we could correct lower again, but it looks like we're pushing to the top side. And then if we're looking for possible areas where this would be target, well, we have to kind of look at this prior low here. That's a significant one, because you can see we've actually been making a series of lower highs. So here's our high up here, here's a lower high, and actually this was just very fractionally a lower high too. So we're still making lower highs. So for the time being, we're range bound, and it's okay to buy on what looks like a fairly decent setup on the short term, but just don't be too optimistic about where this price potentially heads. So that's why I tend to think that actually where we stalled out here and then rolled over, that potentially is an area the market could target. You could see it's kind of where we topped out last time, the beginning of that topping area, and that comes in pretty sweetly around the 113 area. So it's almost 113 on the dot. So potentially here, based at 112, looks like we're trying to break through 112.50 and 113 as an immediate target, but it's very hard to know what to do from there. 113 could prove to be a short-term top, and we roll back into the range again until we get outside of this correction phase that we were talking about on the daily chart, this pullback here, either resolving to the downside for a bigger correction or actually resolving to the top side. It's just range bound trading, and it looks like we're contracting within the range at the moment, higher lows and lower highs, so you have to get a little bit less ambitious on each range trade that you take until you get that breakout. Let's move over to the pound. This is the daily chart. I don't use trend lines a lot, just to sort of demonstrate what we're dealing with here. Is we had the surge off the lows from March, and then we did make higher highs, but we've actually made a lower low as well. Not recently, but just in terms of the current price action, you can see we had that big push up to multi-month highs. We were in a correction phase. We came back down to this former resistance, acted as support, but 125 held again, and you can see here we are back at this support again, and it looks like it's giving way. So then the question is, why are we giving way on this support when in theory we should be rallying up into new higher highs again? Well, this lower low probably explains some of it. We've got this kind of shaded area through here, which could just be as low as price gets, or what I'm offering up the possibility of here is that even if we ultimately are headed higher, and so I think there's reason to believe we are, because if we look at this, remind ourselves of the weekly chart, we've got this kind of double bottom like formation here. But even if this is the bottom at 115, which for the moment it is, and that would suggest higher prices, we could still drop to 120 again, that we pushed higher, and it just a big microphone like formation, dropped down to 120 and then tried to make our way higher from there would be one potential scenario. So if we're thinking about this level of support, if we see it better on the 4-hour chart, where it was a resistance, we consolidated beneath, we burst higher, pulled back, couldn't hold 25, pulled back to this one, rallied up, couldn't hold 25 again, and now we're looking soft. Well, then we've got to start thinking a bit more clearly about where this could be headed on the downside if we just cannot hold on to 125 and we cannot hold on to 123.50 around this price level here. So we're looking okay short term in the euro. Interestingly, pound looking like a different situation actually. If you look at the euro pound currency pair, you can go to kind of explain that kind of that difference, because we're actually breaking out to 3-month highs. There's our default chart window. We set our simple template and we have a quick look at this euro chart. You can see here we are on the daily chart basis. We've taken out 90, which is down here somewhere. There's 90. You can see that we kind of chopped around there. We held it recently last week and we're rallying strongly above it now. So this is the euro outperforming the pound, and this strength in this euro pound currency pair, that is explaining why we're getting weakness in cable, the pound dollar pair, but we're getting strength in euro dollar. And so yeah, certainly worth watching this cross pair. This is an emerging uptrend. We've held 90, and right at the top of this peak up here is 95. So that's a pretty clear-cut trade of I say clear-cut. It's not clear-cut that it will work out, but there's 500 points in the offering there if this newly emerging breakout was to recoup all of these losses. If it were, that's from 90 down to 95, that's obviously 500 pips. So let's move on to dollar yen. Now here, this is the daily chart, and you can see that basically we fired up, but we crashed back down. We held on to the low. So that's the kind of basis for what we're dealing with at the moment, is that we've held on to the low on the daily chart. And we roughly held on to the high, so it's kind of range-bound trading again, but we're near the bottom of the range. We've got a rebound off the bottom of the range with that, there's that low that we held above. Nice bullish reversal pattern on the 1-hour chart. We rallied up, but we've had a few false breaks since. But you can see that we're making higher lows for the time being. Of course, we could drop down again, but it looks like we're making successively higher lows and just trying to absorb some of this selling above 107, and if we do manage to absorb it all, that would be bullish for the price. And it looks like we're holding the bottom of the range for the time being. We tried to make that break lower, didn't work. Now we're attempting a break to the top side, and it does look like the price has stabilized a bit here, and potential to push up to the top side. Now this is our Aussie chart. Now let's remind ourselves that I know I've got a few round numbers drawn on here, but basically the crux of it is that we hit 0.70 after a strong uptrend. We're still in that strong uptrend, but again, a bit like Euro, we're consolidating in a pretty neat little consolidation pattern. To me, this would very much look like a bullish pattern rather than some wide-ranging top. Looks more like a consolidation than a top. Now we drop down to our 1 hour chart and we can see that we're in a consolidation again here, and this is just a matter of looking to see which way we can break out of this. We've been capped underneath 69 on the last few occasions. We've been held at 0.685 roughly speaking, so kind of 50 pip range that we're dealing with, and in general we're kind of holding up a 200 pip range between 68 and 70. That's the nature of the beast at the moment. We can't necessarily tell which way we're headed next. If we do drop down to 68 and we assume that the larger trend is bullish, then that's an opportunity. So far we're just holding this range. If we break out above 69, which we haven't been able to for a while, you know, again, assuming this longer term bullish trend is resuming, that again is an opportunity. As we currently stand smack bang in the middle of this trading range, it's a little bit hard to take it either way. So these are kind of what you need to be looking for based on your trading strategy. Really moves above 69 or pullbacks to 68 as places where this you can be a bit more clear in terms of your risk reward, or a bit more clear in terms of momentum, which way this trend can continue. Now switching gears over to gold. So you can see this is our short-term chart. We've got a nice rally off 1750, the round number, last week, and we're just consolidating after that, holding on to those prior highs. The context of this obviously is that we've been in a nice bullish trend, although we've been consolidating really between 1670 and 1750 in the last leg of this uptrend, but it seems like we've broken to the top side. Broke out, you know, stuttered a little bit, as will often happen with the price, but Friday was a nice one because you can see we came down, tested that top of that range at 1750, the big round number, and we rallied up and closed near the highs. Now we may be stalling a bit today, we're actually down a bit, but again we're testing these interim highs, and so I am working on the basis that these highs hold through here and that we push up again, and we're on march to 1800. You know, if you believe the trend continues, it's an uptrend, so 1800 the big marker point, and we're about $10 per ounce short of 8-year highs in gold. So it's kind of what you want to see, a previous uptrend, a pullback to a significant area of support, old lows, big round number, a snapback off there, a pullback to the resistance, looking for it to act as support. So far it has, and then assuming higher prices is the kind of game plan as it stands in gold. Here's WTI crude. So if I remind ourselves of the picture here, we've had the big rally, but we're sort of double topping a little bit above 40, and so you can see in the RSI as well also a head and shoulders formation. So there's a good chance we get lower prices here in gold, that 40 is sort of capping this rise, and we talked about the gap on I think the last 3 or 4 even webinars as a reason that the rally could stall out, and it has. And last time we got a rally from 35 up above 40, but we pulled sharply back, and then we've rallied off 37.50, which obviously between 35 and 40, 37.50 is the middle of the range. So people saw the gap above 40, saw it pull back between in the middle of 40 and 35, tried to buy it up there, but we couldn't really hold above 39, and we just tipped back to the lows again. And to me, the momentum from this fall and then the petering out of the upside here and the retest of the lows suggests to me that we move lower, and there's not a particularly clear-cut area above 35. The only thing is where did we get the kind of break from after touching 35? It was with this big strong candle here. It was when we took out these highs. So that comes in at unsurprisingly another round number is about 36. So if you're still feeling good about oil, 36 could be an area of value if in fact we do break through 37.50. Equally, if you think this down move has more to go, 36 could be a more conservative target than 35. Now let's have a look at good old Bitcoin. And so this is a shaded area I've had beneath 10,000 for the past few weeks on the chart. I just added in this rising trend line, and I think I had this last week if memory serves. And you can see we're really grinding into the bottom of this line here. A potential scenario here is that we do just get some kind of basically capitulation, unable to break through 10,000. We get a kind of capitulation sell-off where bulls just couldn't take control, and we drop down to 7,550, 7,500 thereabouts, and maybe we can collect up more buyers on those lower prices. That's a potential scenario here. Obviously, still some potential that we get the upside break, in which case we're breaking above 11,000, having tentatively broken 10,000 but stalled ever since. So this is the kind of consolidation phase we're in. It seems to be tightening. These trend lines are working quite well, so watch this as a possible. At the moment it looks like a downside. Maybe we get a false break to the downside, then a rally up. So if you're bullish, that would be a great setup. Obviously, if sellers tried to take it down but they failed to do so, we've got back above the rising trend line again. That could be a catalyst for much higher prices. But equally, if we get below the trend line and the selling momentum picks up, and we're down below our kind of shaded region, then you can kind of expect, maybe this as a first target area down here at 7,500 to 7,600 perhaps. So I think this consolidation phase in Bitcoin has to end fairly soon. So these are two potential scenarios to look at. Now, last but not least, let's look at the stock market. Do you remember last week we had two scenarios we were looking at? We were talking about the retracement from the record high, not record high, from the highest, since the March sell-off. Nasdaq's hit record highs, S&P not quite. We talked about these supports, we sold off, and we were just talking about, well, what comes next. And we'd had these two peaks and these two lows, and we got an attempted break to the top side, but ultimately this sell zone that we were talking about between the 61 and 76.8 Fibonacci's held out, and we jumped, and interestingly we just held at the bottom trend line twice. So and so actually this channel, apart from this false break to the top side which just respected the Fibonacci area, we're actually the channel still sort of holding. And now interestingly we've had a rebound off the 3,000 level. So if you are bullish, you're basically looking at a kind of rally, consolidation down to the lows, break up again. Around the 3,000 level, obviously not a bad area that might collect some interest. The fact that we couldn't hold this break to the top side is obviously not a great sign. But the fact that we're still in this sort of vaguely decent consolidation phase and above 3,000, despite the the rising COVID cases in the United States and elsewhere, actually the overall outlook still looks decent. We're still in this uptrend, but obviously kind of that ominous sell-off, and does the rebound, is it petering out into the next big leg lower? That's obviously the big question mark. While we're above 3,000, it looks less likely. So still more of a correction and a possible jump to the top side from this formation here. But we've got to be mindful of another big wave sell-off like this. It's certainly possible. Markets are a little bit overvalued based on where earnings expectations are supposed to be. It's obviously all about the reopening trade, and so just main thing in terms of if you are following the news and not just the price action, it's just those COVID cases really that will determine the near-term momentum in the market, whether it looks like these outbreaks in Arizona, California, etc. are getting worse, or whether they're actually getting more contained, and then the market can look through it and move higher again. Right, I'm going to call it a day there. Thank you very much for watching, everyone. Good luck trading this week. And of course, if you do enjoy these videos and want to make sure you don't miss the next one, make sure to subscribe to the channel.